Jamie here. Hope everyone's doing outstanding. Hang on one second. Sorry about that. Tuesday, August 26th, 9:08 a.m. Apologize for the delay there. Happy Fire Fed Governor Day. Just joking, sarcasm aside. S&P slightly in the red here after yesterday's pull. Most of that happening, not most of it, but a majority of the last 4 minutes of the day had a big pull. Um, Small caps are slightly in the green here this morning, so maybe we start a trend of some outperformance finally. But not much in the way of catalyst. Yesterday was one of those sessions. Markets opened in the red, tried to get to green by about 12:30, got really close to being flat, and then just melted into the afternoon. It was a slow melt, nothing, no crazy swings, and then the last 4 minutes, boom, dropped over a buck 50 on the SPY, closed at lows. And here we are again today. I don't think there's not much in the way of catalyst, right? So we do get the second revision of second quarter GDP this week. There's a consumer confidence stat. I don't know which one that is at 10 o'clock, but all eyes are going to be on NVIDIA after the close tomorrow. And it's funny, I was looking around on most of the sites I normally look at, right? The Wall Street Journal, well, CNBC, not as much, Bloomberg. And then some of these, there's not much in the way of headlines in regards to NVIDIA, where a lot of times, especially the weekend heading into the earnings, there will be a lot of headlines. So, that a good thing? That a bad thing? I think the less chatter, the less opportunity of a sell the news event. So, big report tomorrow after the close. Also of note, like Google's at almost at all-time highs again, or it did hit all-time highs yesterday. So that's something to rant about another. So we have NVIDIA earnings. We had that whole snafu after the close yesterday. You have President Trump firing Fed Governor Cook. I mean, technically firing it. I don't know if he has a legality situation with it. But here's the thing, right? I'm not here to argue the merits of what he's doing, right? Wrong, right? Illegal, legal. Is she gonna get fired? I'm just here to trade the markets, right? So if you have a bias on whether you think it's a right or wrong decision, it might get into your how you trade, right? If you think it's a great decision, maybe you think it's good for markets. If you think it's a horrible decision, maybe you think it's bad for markets, and then you let that play into your to how you trade. It's like you got to somehow dislocate your emotions from trading. That's like key, right? Especially when we're like feels like all the time. It's everybody says, "Oh, this is crazy craziest political environment, the most divisive it's ever been." It seems like it always is. It's right. It's the same way people always say every day, oh, always looking back to yesteryear saying, wow, things used to be better when we did XXX, right? And that's just how the world is always going to be. People are always going to say, they always remember times that were great and think that right now we are living in the worst times in history. That's how it always is. So anyway, we'll see how this all plays out. What it does do is creates more uncertainty and then kind of raises that the worry that maybe the Fed is not being independent, right? Not being an independent agency. We'll see how this all plays out. I Not really a big deal in regards to the voting, right? Because even if put in another Fed governor, I mean, it's not going to move or swing some of the Fed cut votes, right? You're not going to. It's not like the Supreme Court where you have one justice might swing it on either side of the fence. So uh, anyway, so that's kind of rants for other days, but NVIDIA is the big one here this week. And then, you start looking at, after the close yesterday too, or I don't know if it was this morning, I'm trying to rationalize, okay, what's the next leg to the upside? And I still have 646, 628 on the SPY this week. I think there's going to be consolidation. I don't know if there's going to be a big pull, but I'm open to both sides. And then I see Kramer saying, uh, not buying anything right now, waiting for discounts, something to that effect. I'm like, oh gosh. And I'm not saying he gets everything wrong, but he has a lot of times he definitely, if you go inverse Kramer on some of these things and comments that he's made on FinTwit, it becomes pretty profitable. So does that mean we're going to rally? I don't know. I'm not saying that's a sign, but had to. Sometimes I just laugh at some of that stuff. All right, so that's kind of overall markets. That's why we watched it today. Yesterday, it's like one of those days. Yields were higher. The dollar was weaker. You have the VIX was higher. So just things to watch because if that escalates. Also overnight, the 30-year yields in the UK, multi-decade highs. I think it's like 5.3% on the 30-year, something like that. The gilt. So those are not good things, right? And you have the EU bloc because the UK, the Brexit, if everybody remembers that, they're like mocking the UK, calling some of I forget the exact wording they used, almost like it's because they have a stupid government or something. They said something to that effect. Maybe they've made some wrong decisions, but you just hope the US doesn't go down that slippery slope, right? The concern would be that if we do cut rates in September, yields keep going up, right? That would be worst case scenario. So and some would think because that might happen just because of heightened expectations of inflation. So that would be, I'm not saying that's what's exactly happened in the UK, but if that we go down that slippery slope in September and rates get cut and yields start to spike, not a good situation. All right, that's rants for other days. Overall market. So just quick individual names. Yesterday wasn't a day I did much. I mean, we chopped around. I was looking at some names, but I'm more of a cautious stance. So it's a kind of a time where I'll be less aggressive getting on the call side and open to getting some put hedges. Zoom opened. I was pretty much flat, spiked after the open, almost tested 84 within a couple minutes. Used someone to move to close more of my weekly strikes for close to 200%. And then I just held the last few runners. I was actually looking for more strikes. So if it held that level, I might have went and looked to play for some calls September's, maybe September 90, somewhere in there. But then it found pressure and then chopped around for the rest of the day, closed down a little more than 1%. Still like this one. At the same time, it, if it doesn't find some strength and markets are pulling, I might look just close the last out and revisit. But like I was mentioning yesterday, nearly $8 billion in cash, so 30% of their market capitalization is in cash, which is phenomenal. It's also one of those names that I think if you put their ticker stock to if you took their fundamentals and shifted it to some other ticker and some other brand, and someone just had to look at their numbers as opposed to what sector they're in, stock would trade at three times its valuation. Just my humble opinion. So that's why I like Zoom. I'll continue to look for opportunities there. And then finally add some more SERV strikes. 975 was that key spot. I was holding that and then looked like it was going to go. And some of the premise too is that I thought that small caps would continue its nearly 4% rally from Friday, which it didn't. Small caps closed down 1% yesterday. But I'd rather add on kind of like a flat day on SERV that as opposed to trying to chase a squeeze or a rally or some FOMO. So went and got those later dated strikes. I'll continue to hold those. You know my thoughts there on SERV. If you haven't heard, I'll do a rant later this afternoon. And then the marijuana names. Take a look at Tilray. Tilray. I mean, when I say take a look at Tilray, it was like 50 cents a couple weeks ago, and every day I look, it just keeps going higher. And some of that's because I'm looking at the space, right? So CGC, which I had those October strikes, close them out to cover costs for 100% or over a little over 100%. And I still hold those January strikes. And then it faded from that 160, 175, 180 handle a couple weeks ago, it started August, and now it looks like it's resuming. And then you look at some of the other names in the space, they're starting to get some momentum too. So is this a I rally number two, right? Is this the start of some more FOMO kicking in ahead of some possible news? I hope it's both, right? But nice move here this morning. It's gapping over 150. It gets over 160. I might look for some of the January 250 strikes, which are still inexpensive on a risk reward basis. Because similar to SERV, right? Want to get in before it's hot and sell when it's piping hot, right? And premiums, all that start to go nuts, especially on some of these names that are speculative that have short interests that can really skyrocket. Then premiums go bonkers. So want to be in before that happens. So that's CGC. And then IIPR closed it nearly multi-month highs. Over that 55 handle, hasn't done that since mid-July. It's actually up here 55.80 here this morning. Still have those October strikes. They're over 100%. I had locked some of those in. I might look for some more strikes on strength. 57.50, that's the key spot there. I have Reddit on here. I don't think I put that on the watch list. I don't know if this is a bear flag. A bear flag, a potential bull flag. Why don't I have this here? I don't have this up here. Sorry about that, folks. Decent day yesterday, but it's like Friday scared me on Reddit because it had every possible, not every possible, but if there was a scenario for it to really squeeze, it would have been Friday. And it looked like it was going to do it, and then reverse course and actually closed red despite the huge market rally. So I don't know if maybe it's someone was trying to get out on Friday and said, okay, I'm going to use the next bounce to get out. But still watching Reddit. I still think it trades up near 300 before the end of the year. But like I was saying a couple weeks ago, it's a tough run. You could have the 300 calls back at the start of August when it's 180 and probably get feared out a couple times on some of these swings. I mean, it was 250 just 7 sessions ago. So I'll continue to look for opportunities there. Align disappointing after Friday's 6% rally, down 3%. Still like this one. Inside day. I mean, it stinks to be down 3%, but still inside the lows and the highs of Friday. Still like that one. And then Pool and, I don't know, have Broadcom down. Pool down barely 1%, similar to line inside day. 200-day moving average right there at 324. So if it gets over that, off to the races. And then on the flip side, looking at last week, the lows and the highs, 638 or so, 637.50 looks like a key spot. So if we break that on the SPY today, if there's some kind of headline or what have you, or just selling or profit taking, that's a spot I'll look for some put hedges. I talked about it yesterday, some of the software names into it, ServiceNow, and then also my normal hedge plays. And AMD got an upgrade this morning, also as a news with IBM and a partnership. It's gapping higher. So AMD, Broadcom, those are two names that have always worked well on put hedges. But I always say I keep it in context. I don't have my bear suit on. I don't have my bull horns on. I'm open to both sides. I think it's right now this week probably a time just to be somewhat a little cautious. But then again, you look at Google, and I think maybe Google is so some more of someone creating this bearish narrative on the name. It's selling off because people thought AI was going to destroy it, and then it has been anything but, right? It's not only is AI going to benefit, it looks like it's might create a higher revenue growth going forward. And same goes for Reddit, and that's why I like Reddit. All right, let's have a great day, folks. I'll be back on audio later. Rock and roll.